This is Jessica Davis Ortwine, your local Lehigh Valley lender, and I have John Shattah here with us today. He is with the Eric Rothenberger team with Better Homes and Gardens. So we're going to do a little Q&A session, and I'm going to start out first. I'm going to ask John a few questions, and then he's going to ask me a few regarding the market, buyers, processes, programs. So, John, tell me a little bit about yourself. How long have you been in the business?
I've been a realtor since 2020. So the pandemic is what really kind of like sparked the whole, hey, I want to get into the line of business of helping people buy and sell homes. So, yeah, a little over 5 years now.
Okay.
I've been a realtor. And a lot of ups and downs, but it's been a great experience kind of just learning about this industry, honestly.
And what areas do you typically cover?
I cover the Allentown, Bethlehem, Easton area, but I mean, as a realtor in Pennsylvania, I've went as far as Monroe County, so the Poconos. I've went to Sellersville, Percy area, so I kind of expand my horizons, but wherever the clients need us to go. I mean,
Okay.
That's kind of, I'm willing to go within like a 2-hour radius.
Okay.
You know, and I know some realtors might say, oh, I would only do, the local area, but, the more you expand, the more clientele that you build and the more business you build. So
it's just where you're needed.
Where I'm needed.
Okay,
Right.
Wonderful. So let me ask you something. If a buyer comes to you and they're not pre-approved, tell us a little bit about your process.
So the process that I have right now, and this came with experience, is asking what I call lender questions.
Okay.
Credit score, debt to income ratio, employment status. These are things that I didn't know at first as a realtor, but over time, listening to you, listening to other lenders as well, I was able to kind of get an idea of where we should start with someone who's never been approved before. So asking the right questions is what I start with. A lot of times you'll realize whether or not they are going to be approved or not. And if they are, then we move them along the conveyor belt, as I say, to the next step, which would be talking to a lender like yourself. And if they're not, we'll build a game plan, a strategy on how to get there. And that comes with your help as well. Running a preliminary file on them, like, hey, you're not approved, but this is where we can go to get approved. That's typically how I would start with a client.
Okay, perfect. And what would you say some common mistakes buyers make going into the home buying process? So you have, buyers, let's say they are pre-approved and they say, John, look, I want this, this, and this. But, sometimes, with buyers, whether the first time home buyers or repeat buyers, what do you see some common mistakes they make going into that process?
Realistic expectations.
Okay.
A lot of times, investors, the seasoned ones, I would say, the ones that have a portfolio of investment properties, they tend to get it because they've been through it before. But you got somebody, for example, who wants to buy an investment property, but they want to get it for pennies.
Right.
And, the expectation there is that I can get a good deal for cheap. And while that's true in some cases, it's not always the case. And you and I know that more than anyone. But I would say the biggest mistake is just having them think that things can go ABC and nothing come up along the way.
Okay.
So
are you starting to see home inspections kind of coming back a little bit?
The last 2 transactions I had actually they came with home inspections. And if we go back 5 years ago at the height of the pandemic, people were waiving inspections like it was nothing. But inspections are definitely, I've seen at least this year, a few of them. And I always will recommend an inspection unless they're a contractor and they can save some money on, doing it themselves.
Yeah.
But inspections definitely have, I think, come back. And I think that's because of where we are in the market right now. You do have a lot of homes that are still on the competitive side, but you have a lot that are also not as competitive, meaning sitting on the market 30 plus days. And in those cases, the competition's not there where, we have to waive our inspections to get this house. So I am seeing it. I've seen it a lot this year. I'd say more than any other year so far.
Yeah, I have seen it too, especially if septic, even termite every now and then I'm seeing. So speaking of inspections, what do you feel a buyer could do to help make their offer stand out?
I would say there's a lot of I call it gestures
Okay.
in an offer. It all comes down to really how bad the buyer wants the house.
Okay.
Obviously waiving your inspections is going to be one hurdle that the seller doesn't have to deal with, so it's a little bit more attractive. But there are other things that you can do. I had a client that won a home strictly off of them paying the transfer tax.
Yep.
For the seller. Again, good gesture. It's
Yep.
something that, not many people think about, but being able to say, hey, I'm paying that 1% for you kind of tips the scale in some cases.
Yeah. Yeah, it's not always being, I guess, the highest offer,
Right.
but sometimes, doing little things, paying transfer tax, waiving inspections, or possibly having a little bit more money down, obviously having that pre-approval all kind of makes them stand out.
Yeah, absolutely. And, there are, like you mentioned, it's not always about the higher price, but an appraisal gap, guaranteeing that appraisal gap a lot of times will, make the seller feel more comfortable and reassured that, okay, this deal is going to go through no matter what. So there are many different things that you can do to kind of help and make your offer stand out. And, transfer tax is just one of them. And inspections obviously is one of them too. But that guaranteed appraisal gap, I feel like, is something that is overlooked. And it's not for everybody, because if you don't have the money, you shouldn't be doing it.
Right.
or going to get a loan to try to guarantee that money. But it all comes down to how bad, people want their home that they're buying. But definitely transfer tax was one that I've seen a lot this year.
So with Fannie and Freddie, they actually started appraisal waivers with as little as 10% down, which is pretty cool.
That is
cool. Sometimes we can kind of run the file through Fannie and Freddie to see if we're going to get that appraisal waiver, because then if you say to the listing agent, hey, look, we have a waiver on this at this price, that can obviously make your offer a little bit stronger as well, I feel.
Sure, yeah, absolutely. I mean, now that there are things in there that are, able to be, given out to other buyers, and things are just evolving, I feel like, especially in the mortgage industry. Things are always changing and programs always coming out, and it's a fun time.
Loan limits are up. I mean, back when I started 15 years ago, like the loan limits were, say, in the 400,000 range, and anything over that was considered jumbo, and now they're well in the 800s. So
that's crazy.
Before it's considered jumbo,
right?
Because of the way that the housing market is and prices increasing and stuff.
Yeah, very, very interesting time, and I think it's just going to get more exciting as we continue to evolve in this industry. So.
Well, I did read a little bit. The MBA, the Mortgage Bankers Association, they said that applications are going from 2.2 trillion to about 2.2 trillion next year, and purchases are going to be up somewhere around 6 to 7%.
Wow.
So hopefully an exciting year for everyone.
Yeah, for everyone, for sure. For buyers, sellers, agents, mortgage lenders, everybody should be kind of looking forward to what's coming. And, I'm a product of my environment too, and I'm kind of learning as I go as well. And it's been truly fascinating to see some of the programs that are coming out that are really intended to help buyers and sellers in some cases, but just evolving. It's just evolving, always evolving, and that's what real estate's all about. Yeah, evolving and adapting with the trends.
Yeah, So you and I have been working together for a few years. We have some very successful closings. What would you say the importance is with a realtor loan officer partnership? Kind of explain that process to me, or how you explain that to your buyers.
Yeah, absolutely. So for me, I mean, you're going to have all walks of life from every industry. You're going to have good realtors, you're going to have bad realtors, good lenders, bad lenders. And for me, I'm a big testimonial person. So like, if I have a good experience with someone, if, you've helped me almost every single time. I think there's only one time we had a listing that didn't go through, and that's just because, mortgage payments and stuff weren't really up to their standards. But I would say the relationship between a realtor and a lender is very important, because it works like one hand washes the other.
Right.
If I'm going to be talking to a potential buyer and we're talking about what their mortgage payment's going to be, or taxes, or credit scores or whatever the case is, you need to have someone on the other end that is receptive to that, which is yourself, who understands that and is compassionate with the buyers. Because a lot of times what I noticed is that they're not completely honest with me all the time.
Right.
You know what I mean? Like everything sounds good on paper until we run the file and then we're like, oh, we got this.
Right.
So kind of setting the expectation up front, like, hey, listen, I work with a lender. Her name's Jess Davis. She's a no BS kind of person. She's not going to tell you something that you want to hear.
Right.
Which is good and bad in some cases because sometimes they don't like to hear that, but it's the harsh reality of it sometimes. Having a good relationship with the lender and the realtor, vice versa, it just helps smooth the process out and set the right expectations, I would say. So, I can only really speak on our experiences. I've had some other experiences with lenders, but by far I've done more transactions with you, not for any other reason than the fact that we have a great relationship and we are able to explain the process to a buyer thoroughly with no hiccups and with no surprises later on. I've dealt with lenders in the past that, say one thing, we get to the finish line and it's like, oh, well, I forgot to tell you this. And it's like, it's a bad reflection on me as a realtor. Yeah. So
it's not a birthday party.
Yeah.
I don't want the surprises.
Exactly. So yeah, I would say that's really it, is just having a good relationship and just being upfront, honest, and thorough, and explaining it in a way where they understand. Because I've dealt with many buyers, like my most recent one, had no experience at all, with buying, and they have no idea what a discount point is.
Yeah.
They don't even know the type of different loan options there are. Yeah. So you kind of have to start from the beginning and not in a way where it's going to overwhelm them or scare them.
Right.
And I think you do a great job at really easing their anxiety when it comes to that.
Yeah. Awesome.
So let's get into the lending aspect of things now, Jess, because I get tons of questions that my buyers ask me. And while I do feel confident because of the answers you give me, there are some that I'm just curious, what you think. So what are some common mistakes that buyers make either during the home buying process or maybe even right before they try to get pre-approved?
So if you're looking to purchase soon, whether you're an existing home buyer, you're looking to sell and buy, or you're a brand new first-time home buyer and this is your first time, we want to make sure, first and foremost, you have steady income. So, we don't want to be switching jobs, switching from W-2 to self-employed. Now, yes, there may be products out there that could possibly get certain people approved, but we just want to be cognizant of those things. Depositing large amounts of cash. Cash can't be documented. Opening new lines of credit, new credit cards, car loans. Like if you're going to buy a house in the next couple months, let's not get a brand new car, especially car payments nowadays. I see $800, $900, $1000, $1,200 a month. So, and that could be half a mortgage payment. So you just want to be really careful when it comes to your debt, your income, make sure, you have a steady job, or, if you haven't been there for a few years, that could be fine, but we want to make sure you just have that job history. And then, of course, with the down payment amount, just be careful with how much you're putting cash-wise into your bank, so on and so forth, since it can't be documented.
Yeah, and you touched on something there that I just wanted to add a little note to. This was years ago. I had a client who, and I won't say names, but I had a client who was under contract, and they were so excited to buy this house, and they were just through the roof, and, don't do this, don't do that. I won't buy a car. I won't do this. The night before closing, they go to Home Depot.
Yeah.
They open up a credit card.
Yeah.
And they rack up this credit card because they're getting ready for this new home. Unfortunately, the next day, because the credit score changed,
oh no,
it affected closing. We eventually did close, so that's the good news. Yeah. We worked our magic and things did close, but it affected closing.
Yep.
So just to touch on what you said, I wholeheartedly agree. Trying to stay put, wait until the mortgage is approved, and then if you want to go buy your Lowe's items or Home Depot items, at that point, feel free to. But I just wanted to add that.
Yeah, it depends on the customer. I mean, if your debt to income ratio is 12% and you want to go get a little credit card, it may not affect you, but that's always a good conversation I like to have with them. Look, before you do anything, before you even buy a pack of gum, call me. Let me know what you have to switch jobs or whatever the case may be. Let's talk about it. Don't hide anything because I will be your best friend throughout the process and I will help you through any type of decision that you have to make.
Yeah. So this is actually a good transition to my next question. So how do you actually determine what the best loan option or loan product is for a prospective buyer?
So it really depends on what their goals are. First-time home buyer, do they need any type of closing cost assistance? Will they qualify for that closing cost assistance? We have a lot of different programs, for first-time home buyers or even repeat buyers that can help with down payment closing costs. Or are they getting a gift from somebody, like maybe a grandparent or parent, family members giving them money and they don't need any assistance. So maybe we could just go with a standard conventional loan. Or maybe do they only have 3 or 4% to put down and we have to go FHA? It also depends on what type of house are they buying. Will it be approved FHA? So I go through all these different questions. Where's your credit score? Credit score sometimes determines what product we use because of the rate and the mortgage insurance, so on and so forth. Also their debt to income ratio. Some products and programs will go a little bit higher on debt to income ratio where others won't. So I'll go through, I have, a bunch of questions. I ask them what's a comfortable monthly payment and, what are your goals? Where do you see yourself in a few years to kind of determine what type of loan's going to best fit them.
That's very interesting. Yeah. And so when someone asks you buying down the rate, what does that mean? Can you explain that a little bit in simpler terms even myself, I sometimes the simplest things, I feel like I overcomplicate, but buying down the rate, could you just kind of give us a little overview of that?
Yeah, I'll give an example. This is not, of course, every person's going to be different. So this is just generic. So let's say somebody's interest rate is 6.5, but they're more comfortable with their payment more around 6%. So that could mean they may have to pay 2 points, again, as an estimate, to buy that rate down to 6%. And what I normally tell people is not to look at it as just, points. Look at it as you're just prepaying your interest. And that once, I kind of heard it like that, when I talk to customers, they're like, oh, okay, so I'm just prepaying a little of my interest instead of thinking of it, oh, it's a $2,000 or $4,000 cost, So, that 6.5 versus 6%, depending on the loan amount, it could be $200 a month. And maybe the customers, has more money to put down so they can pay those points. They rather the monthly payment be a little bit lower.
Gotcha. Yeah, that makes a lot of sense because it seems like it's something simple, but when you kind of, in my mind, I overcomplicate things sometimes, so it just seems like it could be a little complicated. But I'm glad you explained that because it's a very easy way to think about it. When it comes to, I have a question now about Zillow.
Oh, okay.
Okay, so if a client goes on there and is looking at a home, Zillow listing, and they see that the estimate at the bottom there, the estimated mortgage payment is $1,200 a month. They get excited to go see it. We go look at it. Then we come to you and say, hey, Jess, give us the numbers. What are we looking at here? And they see something totally different than on Zillow.
Right.
How do you kind of explain that? I'm sure there's maybe something on Zillow that's being left out. What's the simplest way to kind of answer that one?
So to me, from what I've seen on Zillow, they always put 20% down. So there's no mortgage insurance. They estimate the taxes. They estimate the homeowner's insurance. So when I'm looking at it, if we're doing, a loan that's say FHA with only 3.5% down, that $1,200 payment now with 3.5 versus 20% is going to be a little bit higher. We also have to make sure the taxes match what's on the tax record versus Zillow, because sometimes Zillow will only have school or only have county township. They won't have the full picture.
Right.
So the taxes may show $2,300, but really they're $5,000. So I do kind of explain that if they see a payment or a rate or any type of numbers anywhere else, I do send them a copy of the estimate, like the worksheet, and we kind of go through the numbers line by line so they are aware, so this is the principal and interest. Here's the taxes, insurance, mortgage insurance if it's needed, and then they can see the full payment.
That was great information, though. Very helpful, and I thank you for explaining it in a way where I can understand it. I'm just like every other buyer out there too, where some things just are not as simple
Right.
for me. And hearing you explain some of these things has been very, very helpful. So thank you.
You're welcome. Thanks again for coming in today. I really appreciate it. If you have any questions about any of the topics we discussed, our contact information will be at the end of the video. And please look out for more videos to come.
Thank you for having me.